Welcome back. Now, if you're joining, we're talking about digital insurance. Now, with the changing consumer expectations and advancement in technology, many businesses have transferred their operations online, and others are fully operating on the online platforms, including the insurance industry. Now, one such company is mTek Services, and we are joined by Kelvin Ngeno, their head of production and digital strategy. Thank you so much for coming. Now, my first question, what is mTek all about? What's the business that it does?
Good. So thank you, Vincent. Thank you for having or hosting me in your studios this lovely Monday afternoon. And yeah, mTek, that's mTek Insurance Services, is a Kenyan-born company whose mission is to give access to end users and customers insurance so that they move closer to opportunities and gain financial independence. So that's what ideally our mission is. And technology is more of an enabler to us, and we operate primarily in the African market, Kenyan dominant, and also spanning across East Africa.
Okay.
Yeah.
Now, the insurance industry has around 52 industry players in the same sector. So what are your targets? Which people are you targeting?
Okay. So yes, so mTek Services is set up as an intermediary. And as an intermediary, I mean we are the go-between those 52 insurance companies and customers who are in the retail sector. So when we think conventional products, insurance products, you know, insuring motor insurance, your vehicle or health, etc., that's where our day-to-day falls again. So out of the 52, yes, we do depend on them to reach the consumers. So legally, as regulated by the Insurance Regulatory Authority, we do assist to distribute and also handle the customer through their lifetime when engaging with insurance products. This can be on purchase, on claims, on renewals, etc. So that's how we are set up and legally regulated by the government. Yeah.
Okay. You said you're the go-between between the clients and
Yes.
those who are offering. So my question therefore is, in terms of now from a consumer point of view or an investor point of view, what are the advantages that you bring to this particular sector?
Yeah, so standing from mTek's perspective, the first thing is, yes, we do have the license to operate and also to customize our products. So mTek Services is an insurance broker. So there are two types of intermediaries in the market. There's an insurance broker and an insurance agent. So the advantage of running as a broker is that we do own the customer. We do understand the customer better, and even we can lobby for the customer on behalf on behalf of the customer. So the underwriter also, we can go the extra mile to custom make products and personalize for that customer. As an insurance intermediary, on the other hand, is they're only fixated in terms of distribution, and they only deal directly with the underwriter of the 52 companies in this case. So 52 companies in this case, there's tier 1, tier 2, and tier 3, which all both agents and brokers do operate with. Now the extra mile which mTek Services has come to assist, and also in terms of our mission, is to assist with trust, distribution, and affordability. So with that being key problems which customers face in the market, they say we don't trust insurance companies as much because of no claims payment, or the fine print maybe was too much and they couldn't understand what they're entering into. Affordability in terms of savings and flexible payment plan, and also custom products. So mTek leverages on technology to distribute that, and we can, from Nairobi, you can get a customer in Moyale overnight without necessarily having a shop in Moyale or any corner of the country. Yeah.
Okay. Now you talked about trust, and we live in a digital era where we see on the news fraud, online fraudsters getting away with millions of shillings. So what are you assuring your clients that this is an internet thing and it's also safe as well?
Yeah, so definitely that's a culture shift and mindset in itself change, and we do rely on a lot of consumer education. So, you know, even with the penetration of smartphone crossing over the 110 mark percent in Kenya even, or even in Africa. So it's the right time, if I may say so, being able to leverage on technology to distribute. So trust again, I think customers, yes, in terms of hacks and you know, there's use of my personal information.
Yes.
There's also aspects whereby I don't know what I'm getting into or signing up into. So we do make sure through the customer experience and journey, we use the best industry standards to hold and to request for customer data. And further beyond that, we do rely on governance acts such as the Data Protection Act of 2019 to assist customers to say that, yes, it's a local product and your information is secure. And further beyond that, there's no aspect, there's also the human element, whereby in case you need assistance, you can call, you can also write, and even visit our offices if need be.
Okay. Now, in terms of, if you look at what COVID-19 has brought up, a lot of businesses were affected, okay? And some that were not affected as much, that depended on insurance policies, were at least covered. Now, what has COVID-19 given the insurance sector a hint of what they should do in terms of now making sure that they go beyond and help their customers?
Yeah, so that's a good argument. So you see, when we look at the insurance sector, we look at retail and also B2B or business to business. So retail is end consumers who rely on their conventional products, motor etc., even crop insurance etc. Now for the normal, let's say corporate-based businesses, B2B or the like, businesses definitely took a hit. Their bottom lines took a hit, and they couldn't manage to fulfill their services. So that in itself was a blessing in disguise, which further elevated the uptake of insurance for those even normal businesses. It can be yes, even insuring my cargo in transit or goods in transit, or stock, that dead stock that is somewhere in the warehouse, or even my crops, for instance. So yes, it took uptake. And one thing I know, we normally say insurance penetration in Kenya is south of 3% thereabout, being a ratio of the GDP, but even uptake is 10% thereabout. But that progressively, it's been, I think there's now a culture shift, and people have realized, yes, we do need to safeguard our assets even as a business.
Okay, you talk about uptake, all right? And if you look at marine insurance, we are seeing investors who import don't really necessarily take this kind of insurance. So apart from the fact that people are unaware of these products that are available on the market, what are some of the things that are affecting the insurance industry as a whole?
So King is, even based on your question and argument, is education. So one, it's education both from a typical mwananchi and also from a business point of view. So trying to sensitize, which IRA is doing a good job here in the Kenyan market, and also similar regulators in other markets are trying to do, is to also try to push the local individual, the normal individual, to understand that. And even it can go as far back as high school education through university, so that you actually plan through the whole financial welfare circle. Even for businesses, mostly it's compliance. You know, you're forced that, okay, if I put my goods on this, let's say, transportation mechanism or mode, I need to pay some kind of coverage. Let's say something like simple as travel insurance, for instance. For me to get visa to travel to another country, I'm compelled to get it. Even coming back home, something simple like motor insurance, I'm compelled to have third-party insurance as a mandatory. So it's education, and also it's in terms of also discipline, personal discipline, knowing that you're protecting yourself and also assets in regards to business and also personal.
Okay. Now, your business relies on the digital platform 100%, okay? And we've seen other businesses as well that are relying on the internet. Let's say the delivery services, where you get your stuff delivered to your homes. And we spoke with a couple of them, and they're saying that they're not insured, because you see, you get your goods transported from the seller to the consumer, but in between you don't know what happened. A lot of things can happen. We have accidents and things like that. We have rainfall that can affect the goods, okay? But these businesses are not insured to cover that, all right? Is this a gap that the industry could leverage on and make sure that these businesses survive and also the consumers get their own products?
Yeah, a good question, and it's definitely an ongoing transformation. You see, we are currently in a digital transformation in terms of the question of insurance, and one of the key things to deepen insurance is partnerships, which I think also mTek services are really tried to leverage. So by partnerships, I mean bundling insurance on goods and services as an extra cost or minor or cost in itself. So as the example which you've mentioned, which is on-demand delivery for goods,
yes,
is let's say a television being ordered from point A to B, then alongside that cost of delivery, then there's a component of insurance premium. But to make that more efficient, more cost effective, then there's the element of technology coming in, whereby possibly the two partner systems have incorporated some form of back office or ERP systems that talk to each other and assist to tailor make the cost. And also for the customers also, I think one of the strengths which as mTek we've taken as learnings is creating a marketplace, which I mean it's like an exchange. So you're not constrained to one of the 52 underwriters in a market, or so you're not constrained to a specific brand. So we do give customers and businesses in themselves variety in terms of and flexibility to choose what they want based on their preferences, and through this over time we personalize their experience. So if you have a business called Kenyan Business, then you want a specific goods in transit quote, then we'll give you options and you can package it as, you can select a specific one and package it as requested. Yeah.
Okay. All right. Now, if you look at the performance of the insurance sector, 2021 is sort of started picking up because of the resumption of services. We have businesses coming back online. We have businesses resuming activities. Now, looking at 2022, what's your prediction? Should we have more of that, or businesses are going to go down as well?
So business definitely picking, GDP will come back and be better into the next year, which is 2023. And one thing definitely we are seeing, especially from the last quarter of 2021 into this new year, is insurance companies have actually felt the adverse effect of the pandemic. One example is the increase of insurance premium for conventional motor insurance most recently, to up to 50% for some vehicles, and locking out some risks. So that is an impact which the economy is trying to reel from. Another one is the health insurance provider, NHIF, also locking out, let's say, claims from private hospitals for customers who have chronic illnesses. Things like also lobbying to increase premium for based on gross pay to, let's say, 1.7% for people earning about 100K. So there's a lot happening. And one thing I think is we're going to definitely ride the wave since restrictions have eased, borders have opened up from Europe to Kenya. So definitely down the following quarters of this year, and also after possibly half of this year, we'll try to see now the economy taking shape again, and also customers getting faith. In terms of progressively, I think there'll be more room for investors also coming in. I can see a lot of, especially on the health sector, a lot of private health insurance entities who are innovating from telemedicine space. There's also individuals who are innovating in the motor insurance space. There's also crop and climate insurance space, innovators around that. So progressively it's going to peak, and looking deeper into the future is more personalized customer experiences, the ongoing insurance revolution, digital insurance revolution trend, etc.
Okay. You talked about more room for investors. If you look at the digital insurance, it's something that is coming up, right?
Mm-hmm.
So this question might give you competition, mm-hmm. but is this a place where investors should be thinking towards?
Of course, yeah, without a doubt. And you see, definitely there's modernization coming in place. Cities are opening up in Africa, etc. And customers are being more modern. So the insurance penetration rate, which as I mentioned, 2.9 thereabout as a ratio of the GDP on premiums, it's definitely going to increase. And also uptake is going to increase with digital access and the like. So investors do have immense opportunities to invest in not only various stakeholders in the insurance space, but also putting in cash in areas which indirectly affect insurance, something like a big pharma, for instance, mm-hmm. In pharmaceuticals, something like also, top of my head, maybe the motor industry. Mm-hmm. Yeah, so definitely then trickles down. But also on the other side, in direct contribution, yes, there's definitely uptake, because with digital, you can span your wheel to anywhere and impact any customer from any aspect. Yeah.
Okay.
Yeah.
Well, that is Kevin Ngeno from mTek, who's telling us this is a place to invest in. If you're an investor out there, consider this particular sector to invest in. We are taking a short break, and when we return, we'll be with Makali John on some of the sports activities that happened over the weekend. Don't go away.